When it comes to countries pursuing sustainable development goals, none are quite as advanced as the European Union member states. With the European Green Deal adopted in 2020, the EU established a set of policy initiatives intended to combat the climate crisis. The deal aims to transform the EU into a competitive, resource-efficient economy with no net emissions of greenhouse gases by 2050. To achieve this, the EU has introduced a number of regulations that support the Green Deal's goals. These regulations help to channel private investment toward the transition to a climate-neutral economy. The Corporate Sustainability Reporting Directive, or CSRD, is one such regulation. And it's one that both investors and corporations need to pay close attention to. In this video, we'll be covering what the CSRD is, who it applies to, compliance deadlines, and how it impacts investors. The CSRD expands the requirements for companies to disclose information on risks related to their environmental, social, and governance practices. It brings the requirements for sustainability reporting on par with the requirements for financial reporting. The aim is to help investors, customers, and other stakeholders understand how a company's activities impact both the environment and society, and ultimately, hold companies accountable for their sustainability claims and prevent greenwashing. The CSRD replaces the Non-Financial Reporting Directive, or NFRD, which is the EU's legacy ESG reporting program. The CSRD expands on both the scope and robustness of sustainability reporting. Beyond just reporting on carbon emissions, companies will also be required to disclose their impact on pollution, water, and biodiversity. They will also have to report on social metrics and demonstrate that they are upholding human rights across the value chain. Disclosures on these subjects will need to be included in annual reports alongside financials, and will also be subject to auditing. These disclosures will arm investors with the data they need to understand the material risks and opportunities that might arise from sustainability issues like climate change and human rights. Without such consistent, high-quality data, it is extremely difficult, if not impossible, to effectively verify a firm's claims about its sustainability practices and performance. The CSRD will impact approximately 50,000 companies within the EU and an estimated 10,000 companies worldwide that fall into one of 5 categories. Large listed companies, banks, and insurance companies already subject to the NFRD, other listed EU companies, listed European small and medium enterprises, large private European companies, and non-European companies with significant business in the EU. It's important to note that large companies are those that meet at least 2 of the following 3 criteria: a balance sheet total of more than 20 million euros, revenue of more than 40 million euros, or more than 250 employees. The CSRD took effect on January 1st, 2024, with reporting deadlines coming in 4 phases. The phased implementation will end in 2029, at which point the regulation will apply to both EU firms and global firms. The CSRD should largely improve the quality and quantity of sustainability-related information available to investors. It will also help investors manage and mitigate the sustainability risks related to regulatory and contractual requirements, and to build products aligned with the preferences of their end clients. On the flip side, these standards also mean that many investment firms will themselves be required to disclose information according to the CSRD. Thanks for watching. Learn more about how investors are impacted by reporting regulations and how they are mitigating their greenwashing risks on the Sustainalytics Resource Center.